Alphabet just posted its first ever quarter of negative free cash flow, minus $5.9 billion. Dollars. This is Google, the company that prints money. For 20 years, it has been the cleanest cash machine in technology, and nothing was wrong with the business. Revenue was fine, profit was fine. It simply spent $44.9 billion dollars on capital in 3 months. Now, here is a part that should make you sit up. Alphabet started this year telling investors it would spend about 90 billion. By the middle of the year, that number was about 200 billion. It did not drift upward, it doubled inside 12 months. Amazon is at 220 billion, Microsoft around 175, Meta up to 145. Three quarters of $1 trillion in 1 year from four companies. Last year, those same four spent about 400 billion, so the bill nearly doubled and the revenue did not, which is exactly when the borrowing started. Alphabet went to the bond market this month and asked for 25 billion. Investors offered it 115. Across big tech, bond issuance is up about 80% this year. These are the same companies that used to buy back their own shares with the spare cash. Now they are issuing debt to buy chips. Meta went further and moved its biggest data center off its balance sheet entirely, a 5 gigawatt site in Louisiana, 80% owned by the asset manager. $27 billion dollars of debt against it, maturing in 2049, 23 years for a building full of chips that turn out few. And the strangest part is how much of this is actually not getting built. 16 gigawatt of capacity was slated to come online this year. Industry tracker reckon about 5 is generally under construction. Microsoft have quietly walked away from sites in London, Chicago, and Jakarta, so the spending is enormous, the borrowing is new, and the concrete is late. None of this is a company in trouble, and that is what makes it interesting. Every one of them could stop tomorrow and still be hugely profitable. But when the most profitable business ever built has to borrow to keep up, the spending has stopped being a choice.